All right, we've got some people joining. Thanks everyone for hopping on. We're going to give everyone a few minutes just to so we can let everyone join, um, and we'll probably get started around 10:02 or 10:03. All right, thanks everyone for hopping on. Just for those who've joined in the last minute or so, we're going to give everyone a few minutes to hop on, and we'll get started in a minute, about a minute. All right, everyone. Thanks for joining this morning. We've got an awesome webinar planned out by National Capital Bank, and we're excited to hear from them about banking and government contracting. Before we dive into that, I just wanted to give a quick overview of 47G for everyone that is not familiar with who we are. We are the Aerospace and Defense Trade Association for the state of Utah, and our mission is to build the world's premier ecosystem for aerospace, defense, and cyber companies. These three sectors make up 20% of Utah's economy, so it's a huge focus of ours. And our main mission is really to help the small businesses. Over the last 10 years or so, we've seen a lot of transition towards the big primes, and we want to make sure to help those small businesses to succeed. We're very grateful for all the primes and for the work they do, especially here in Utah. And we want to make sure to help the small businesses to compete there and bring innovative solutions. Just a quick history of aerospace and defense in Utah. It's been around for a while, and it was all really started by Hill Air Force Base. And it's a big part of what we do here in Utah. It makes, as I mentioned, makes up 20% of our economy. So as I mentioned, our guiding objectives are to convene, promote, and advocate for Utah's aerospace, defense, and cyber companies. And one of the ways we do that is through these different webinars. And so we're grateful for our partners like National Capital Bank, who come and they're able to serve the specific needs of our companies. And so, that being said, just real quick, I can run through some of our partners that are already in our network. And with that being said, I think we'll turn the time over to you, Jimmy. And Jimmy's the president and CEO of National Capital Bank. He's going to give a quick intro, and then we'll dive into the presentation. So,
sure. Thanks, Garrett. Jen, if you want to go ahead and share screens. So thank you guys for having us. We're with National Capital Bank. We're out in DC, headquartered over on Capitol Hill, just a couple blocks from the Capitol. And I'm going to talk for about 60 seconds, then let the bulk of the presentation go. But we have on the call who's Jenny Shiptman. She's our Senior Vice President. She's going to run this call for the most part of this webinar. And then we have Jenna Merriman, who's also one of our commercial relationship managers. Both Jenny and Jenna are in our government contract defense lending arena. Then you have Brad Duncan, who's our Chief Lending Officer. and myself, CEO and president, and Brad and I were out there for the last Board of Governors meeting a couple months ago, and we'll be back out in May, and I think Jenny and Jen are going to join us as well. So again, this is not a pitch for National Capital Bank or NCB, but I do think understanding where the source data is coming from would be helpful. We are DC's oldest bank, and I said chartered over here on the Hill. My background is commercial lending, specifically government contracting in the defense sector. And Cencor, one of the founding members of 47G, has been I've been their banker since their inception, I think around 2011, 2012, and they're in your industry. And when they moved the bulk of their headquarters out to Utah, I got to know those guys, Adam and Alan, over the years. I think they helped get 47G off the ground and have referenced that perhaps that area is a little bit underbanked in terms of government contracting. There's lots of banks out there. I know Zion's and other ones which are very good, high quality banks, but maybe don't have the desire or the expertise in government contract defense lending. And so they asked if we kind of come out there and see if we could partner and help some people out. So, which we're happy to do. And we've committed to this, and we're really enjoying the 47G partnership. As I mentioned, this is not a pitch for National Capital Bank. We'd love to have you guys as clients, but even if you just want to reach out because you have questions or hearing something from your bank that maybe doesn't sound right, we're happy to be a sounding board. And those of you coming out in May, before the next Board of Governors meeting, we'll be hosting a dinner out here on the Hill. So we'd like to have you all out for that as well. With that, I'm going to go ahead and stop talking and pass it over to Jenny so we can get into it. And like I said, if you have questions, feel free to reach out. But Jenny, why don't you go ahead and take it from here?
Hello, everyone. Very nice to hopefully meet you soon, but at least meet you virtually here through this presentation. So what we're planning to talk about here is just do a quick overview of the different types of loans that are being offered to various businesses, what banks generally look for. We'll do a deeper dive into specifically asset-based lending as it pertains to government contractors, and then we'll be happy to take some questions. And so in terms of the types of commercial lending, the basic ones, and there's, of course, if you do a deep dive into any one of these, there's breakouts for every single one of them that we're not going to go into here. So there's real estate loans for either purchase of improvement, construction, for development, leasehold, or investment. There's asset-based operating lines of credit. This is what we're going to talk about here, and it has to do with accounts receivable, inventory, sometimes even real estate. And SBA offers various programs that are available to businesses to finance various things that happen with the businesses, whether it's growth, expansion, purchase, M&A, exit, et cetera, et cetera. And what do banks generally look for? And this is really pulling you out into a 50,000-foot view. So banks look for character, capacity, which is a similar thing as cash flow, capital, conditions, and collateral. And you can break these out into the top main things that banks look for. And I look at it as I'm a very visual person. So when I usually speak about this, I like to use illustrations. So imagine a three-legged stool. So that's the three main C's of credit. We'll look at capacity, collateral, and character. So are you able to service the debt that you're requesting is capacity. Collateral is if capacity or cash flow goes away, what can we use to get repaid? And character is who is standing behind this business. And the secondary two C's are capital, which is essentially what is the personal investment in the firm or in the transaction specifically? Are there retained earnings in the business, et cetera? And conditions, which have to do with what are the terms of the transaction, as well as what are the economic and environmental factors that are happening in the industry, in the country, in the economy, et cetera, et cetera. And now let's dive in. The next two slides are going to be a little bit more meaty, so we'll probably hang out here for a little bit. So what do banks normally look for? What is the past performance of the business? And if it's in your business, what is the past performance, the history and projects of the principals, executive management, et cetera, et cetera. And this relates to the capacity, conditions, and capital. We look at and we request probably at least 3 years of financial statements. And those can be company prepared, CPA compiled, reviewed, or audited. And depending on the size of the project, there's various requirements that banks have that are associated with the level of financial statements provided. We look for a certain debt service coverage ratio. So essentially what that means is the bank, going back to capacity, is the business able to show the bank that you can service the debt that you're requesting at least 1.25 times rate? And so when it comes to, we're going to be talking specifically about operating lines of credit or asset-based lending. If it's a line of credit, we'll look at, if it were to be fully outstanding, what are the interest payments due? And is there enough earnings before interest, taxes, depreciation, or amortization, or net income, ideally, to service that debt, or at least 1.25 times. We also sometimes look, depending on the business and the business assets, we'll look for fixed charge coverage ratio. And so that takes the debt service as well as some other fixed overhead charges, rent, utilities, leases. Can the business's EBITDA cover servicing all of those payments as well? We'll look at tangible net worth. So essentially what that is assets of the business minus the liabilities of the business and minus the intangible assets, such as goodwill, et cetera, et cetera. And so we would like for that number to be at a certain level, depending on the size of business and the type of the transaction. And that can all be discussed individually as you're talking to a banker about your specific need and what that number would need to be, and how that number can potentially move through the years. Specifically, asset-based lines of credit. And so essentially what that is they're used to cover short-term capital needs and cash flow demands of the business, such as timing differences between, for example, the time that you need to pay your vendors and the time that your customers pay you. A lot of times it is very prevalent when you're starting a new contract or something like that. And sometimes when you're just starting out, everything is going through its own processes and systems for the first time. Sometimes you don't get paid for 60, 75, 90 days. And this is where you can use the line of credit so you can hire people, you can meet payroll, and any other obligations that you have. So banks loan funds to borrowers in this type of structure using specific collateral. For government contractors, normally that collateral consists of primarily accounts receivable and sometimes inventory, depending on the type of business that you're in. The banks have to monitor said collateral because normally it flows, right? If you bill, you receive payment, and then you bill again for a different invoice. So what do banks use? So normally in this type of transaction, the bank will take a blanket UCC lien on business assets of the borrower to include accounts receivable, inventory, equipment, et cetera, et cetera. If we are using equipment or specific types of inventory that take a longer time to turn, which means it's going to take you a little bit longer to sell it, get a new one, sell it again, we may need to put a specific lien on that piece of equipment or that piece of inventory. It's not as common, though, as just doing a term loan for equipment, which we can cover another time, or feel free to ask me some questions about it outside of this. And so what we normally look for is accounts receivable aging reports, typically monthly, provided to us, in addition to a borrowing-based certificate, where we do a calculation based on a specific advance rate for your particular transaction, your particular business and industry. We normally require a field exam, so we hire an accounting firm normally to review your billing structure, your payment structure, your customer accounting systems, and to make sure that everything is in accordance to generally accepted accounting principles and some of the requirements that bank has as it relates to this particular transaction. Normally, we require, or banks require, field audits at least annually with the renewal of the loan. If there is a red flag or anything like that, we are able to do them more often as well. And normally the cost for a field exam is anywhere between $3,500 and $5,000. Just so it's not awfully expensive, and at the same time, it's just kind of part of doing business in this field. For inventory, if we are using inventory as part of our collateral for asset-based lending, we may need to send out an inspector to do a review. We may need to get valuations of various types of inventory. And normally, as we'll look for a specific inventory turn ratios. And we look for that ratio to be higher rather than lower, because that shows us that the product is moving through the system. And so there's not necessarily as high as storage costs, holding costs, and then there's demand for that particular product. Advance rates for accounts receivable. And so essentially, let's say that your accounts receivable aging report shows your accounts receivable under 90 days of $1 million, for example. We normally would advance up to 80% on commercial receivables. So if you're a sub on a contract, we would advance up to 80%. If you're a prime and it's a government receivable, we would advance up to 90%, again, depending on other conditions. These are just some of the general statements. For inventory, depending on what it is, banks advance anywhere between 40 and 60%. So again, depending on the type of industry, the health of the business, the type of vertical within agencies, et cetera, the inventory turn, et cetera, et cetera. And then, as I mentioned before, character, what we look for is normally recourse to any principal or owner of the business that has 20% or more of said business, of our borrower or borrowing entity. And essentially the thought process behind that is when the bank is asked to stand behind the business and lend it money, we would like the owners of said business to stand next to us and with us, at least through various growth stages or at the beginning of a relationship or at the beginning of that business. And that's normally a standard ask for most of the banks that you speak to, especially depending on the stage that that business is in. We also would want to look at various options that you have and how senior secured debt, which is what banks usually bring to the table, versus some other things. So if you're looking at working with either venture capital or private equity groups, if you're working with a bank versus any of those groups, you get to keep your business because it's essentially debt versus an equity structure. And so depending on where you would like to go, what stage you're in, one or the other may make sense. If you are looking at factoring versus debt, factoring is a great short-term solution, especially for a business that doesn't have as much history. And we've actually worked with several factors who have graduated some of their clients to us. And so if you're working with factoring, it's quick, it's easy, and it's more expensive than when working with a bank. So working with a bank normally is a more cost-effective long-term solution. Mezzanine financing, I mean, essentially it all depends on what the purpose of the funds is. And it also tends to be a little bit more expensive than senior secured debt. And so the determination there would be what are the needs for that cash, what is the purpose, and how much would it be? What is the cost that I'm going to incur procuring this debt? And while it was short and sweet, normally in these types of things, we can go in a lot more detail with very specific situations. So I'm happy to take any questions. And as Jimmy mentioned, there are a lot of things that we can discuss with various businesses and people. One of my favorite things to do with the bank and as an individual, just with my experience in the community, is just to be a sounding board and to offer options and answer questions and help people decide whether they should stay where they are or consider a change when it comes to their financing structure.
Thank you so much, Jenny. We've got a few questions in the chat. Feel free to send some questions there, and we can answer those. Jenny, one question I want to ask real quick before we dive into these Q&A questions is what makes National Capital Bank different than other, especially Utah banks, just because that's where we are, but other makes you different from Utah banks, especially when considering government contracts? Why, there's a reason we brought National Capital Bank on. We feel you're better able to serve government contracting companies in a lot of ways for banking. So why is that? What makes National Capital Bank special in that sense?
So I'm going to echo a lot of things that Jimmy had mentioned earlier, is we have a really deep bench when it comes to government contracting. And so what and most banks offer products. Banks have checking accounts, banks have lines of credit. We have the expertise to be able to speak to our borrowers and to our prospects about the specific niche of government contracting, how it works, how payments work, what is required, what isn't required anymore, how the lending and the banking in specifically government contracting space evolved over the years. And to be not just a vendor, but more a partner. Don't get me wrong, we're not a venture capital partner. We're not investing in your business. However, we are helping with the knowledge and expertise and structuring something that will work for the business going forward to grow.
Awesome. Thanks, Jenny. So we've got a question from Adam, one of our new partners, actually. And he asked, do you all refinance loans that originated in 2020 through 2021 from the CARES Act, SBA, SA, or 7A loans?
Potentially. Absolutely. We're looking at a couple of opportunities right now that are refinances of a 7A loan program. Yeah. The short answer is yes. And I'm happy to discuss details.
Awesome. Great. Any other questions from anyone else in the audience? Feel free to put them in the chat.
And I'm also happy to say a couple of words. Actually, we do SBA 7A loans, and we do SBA 504 loans as well. And I'm happy to speak to some of the differences between them, because I know that especially in this space, sometimes it's beneficial to utilize some of these government programs. So SBA 504 loans specifically have to do with real estate. So it may or may not be more applicable here. 504 loans are essentially for owner-occupied real estate. So if your business is purchasing a property that they will occupy at least 51% of, there are programs that the SBA has that make it advantageous to use them. Essentially, you only have to put 10% down. You get 2 loans, and one of them, the rate is going to be fixed for 20 years. I can dive into details if anyone has a question about it. The 7A loan program is actually also really interesting and can be used for various things and more things than the 504 loan program, because 7A can be used for growth. It can be used for working capital. It can be used for partner buyouts. That program has some really good uses, and it allows a longer amortization than for a term loan than a normal bank loan would be. And so it definitely has its advantages.
Awesome. Great. Awesome. Well, thanks everyone. Any other questions from the audience? Yeah, go ahead, Jimmy.
Yeah, when she mentioned about National Capital Bank, I'd say something besides our desire and expertise is we didn't really get in the weeds on borrowing bases and advance rates, but I think that's where, if you're talking to your bank, whether it's us or your current bank, what you really want to get into, if you're looking for that working capital need, is the advance rates that a bank's going to lend against your AR. Sometimes it's going to be unbilled, depending on where you are in the stage of the contract, obviously typically earlier rather than later. And those are questions you should be, when looking for financing for working capital, of what's the advance rates like, how much AR can go over 90 before it's discounted at all, or before it's completely discounted. And then what are the reporting requirements, whether it's monthly, quarterly, and typically monthly is mostly standard. But those are things I think people should be looking at and how they can compare bank. Besides whether you like and trust your banker, I would be looking at those types of things, because the advance rate specifically is going to be helpful in forecasting cash flow and how much access to cash you're going to have based upon the work you're performing or have performed already. Those are really on the technical side, not so much the personal side of, do I trust this person? Do I like this person? Do I believe in the bank? That's where where the numbers hit. What's the advance rate? What are my reporting requirements? Do you have concentration limits in terms of total AR? A lot of the smaller initial, startup companies have significant concentrations because they've got one or two contracts and it's from the same entity. And some banks don't like that. Some banks are more okay with that. So those are some of the things that I would ask. And if you're not sure what I'm talking about, or what Jenny or any of us are talking about, feel free to reach out to us and we can chat through it a little bit more. But that's the difference in banks when it comes to government contract lending, really, is how much cash you can get, how flexible they're going to be with you. Hopefully that made sense.
Oh, that's great. Thank you, Jimmy. We got one more question in the chat from Stephen Johnson. He says he's a partner at Luke Johnson and Lewis, a collection firm here in Utah. Their model or market is to service the debt on a different platform. How can we meet with someone to establish a relationship with National Capital Bank?
Sounds like a great Bradley question. Brad Duncan. That sounds like an excellent thing to discuss with our chief lending officer.
Yep.
Oh, you're muted, Brad.
Yeah, we'll send out Brad's contact information.
Sorry about that. I'm typically on mute. We do plan on being in person in Utah in May, so we could absolutely have a face-to-face. Otherwise, feel free to. I think Garrett, you have contact information for us. Feel free to reach out to Garrett or Garrett, if you can provide us with their contact information, we'd be happy to reach out directly.
Yes, and I am putting in your contact info in the chat right now. So let me just throw that in there real quick. And yeah. Okay. Awesome.
Great.
Awesome. Well, thank you everyone for joining. Thank you for taking the time, National Capital Bank. Jenny, thank you for the presentation. This was wonderful. We've recorded this, and so we're gonna put it out on our social media and our newsletter. So that'll hit about 15,000 inboxes, and anybody who's on the call who maybe they had a coworker or a colleague that wanted to join, you'll be able to forward this webinar to them. But thank you again, National Capital Bank, and have a good rest of your day, everyone.